Welcome to another episode of Agentic AI, the future of intelligent systems. For years, trading has evolved in layers. We started with algorithmic trading, systems executing predefined rules, fast, precise, but ultimately predictable. Then came machine learning, models trained on historical data, identifying patterns, making probabilistic decisions. And while both transformed markets, they shared something fundamental. They were still systems waiting to be triggered. A signal appears, a condition is met, a model predicts, a trade is executed. Even at scale, they were reactive. But what we are now beginning to see is not just a better model or a faster algorithm. It is a different way of designing the system itself. Because in agentic trading, you don't build a model that trades, you build a system of agents that behave like a trading organization, not a single intelligence, but a coordinated structure of specialized roles. Think of it less like software and more like a trading firm. There is no single trading agent, there is a system. At the center sits an orchestrator, not making trades, but defining intent. What is the objective? What is the risk appetite? What are the boundaries? And from there, the system begins to operate. You have sensing agents continuously observing the market, some tracking price patterns, some interpreting news and sentiment, some analyzing macro signals, but they don't make decisions. They produce structured signals, not opinions, not narratives, signals. Then come strategy agents. These are your traders, momentum strategies, mean reversion strategies, arbitrage strategies. They consume signals and propose trades, not execute them, propose them. And here's where it gets interesting. Different strategy agents can propose completely different actions at the same time. One wants to buy, another wants to sell, a third wants to wait. And that's not a flaw, that's the system working. Because the next layer is where discipline comes in. Risk agents. This is the layer most systems underestimate. Agents that enforce exposure limits, agents that apply stop loss constraints, agents that balance the portfolio, agents that respond to volatility. They don't generate opportunity, they protect the system from itself. They can reject a trade, reduce its size, or reshape it entirely. And only after that comes execution. A single agent, the only agent allowed to touch the market. Everything else proposes, evaluates, or constrains, but only one executes. And behind all of this, there is another layer quietly operating, learning, a reflection agent that looks at what happened, which strategies worked, which failed under certain conditions, where inefficiencies exist, not in real time, but over time, adjusting the system itself. So, what you have is not a model making trades. It is a system where agents propose, challenge, validate, and learn. And the outcome is not explicitly programmed, it emerges. And this is where the shift becomes fundamentally different from everything before. Because in algorithmic trading, you define the rules. In machine learning trading, you train the model. In agentic trading, you design the organization. You define roles, you define boundaries, you define how decisions flow. And once the system is live, it doesn't wait. It operates continuously, observing, interacting, adapting, and not just within itself. Because in the real market, it is interacting with other systems built the same way. Agents responding to agents, strategies adapting to behaviors that did not exist seconds before. The market becomes a system of interactions, not just transactions. And in such a system, the advantage shifts. It is no longer just about having a better strategy, it is about having a better architecture, how your agents are structured, how they communicate, how they constrain each other, how efficiently they operate. Because without discipline, these systems can become expensive, unstable, and opaque. Too many agents, too many loops, too much compute. And suddenly, intelligence is not the problem. Control is, efficiency is, responsibility is. So the real opportunity is not just to build agentic trading systems, it is to build them well. Systems that are intentional, observable, bounded, and efficient. Because when markets begin to trade themselves, you are no longer competing on who trades better, you are competing on who designs the better system. Until next time, keep rethinking what intelligence systems should be.